Hi, Sagafi, Liberty Home Mortgage. So how does having a bankruptcy affect getting a mortgage loan and buying a home? That's a question I get all the time. So today, of course, that's what I'm going to talk about. So let's go through what bankruptcies are first of all, okay? So bankruptcies, ultimately, they're created so you're not chained to your debt for eternity, right? Okay, and everybody out there's had debt at times or bad situations come up. And there's a lot of reasons for the bankruptcy, but there's two bankruptcies that we focus on most of all in the mortgage lending industry. There's a Chapter 7 and there's a Chapter 13. A Chapter 7 is a complete liquidation. In other words, I charged up my credit cards and I'm not going to pay them back and I go bankrupt and I walk from everything. I don't have to repay a dollar of it. So on a Chapter 7, you do not repay back any of the money. No paybacks, nothing like that. That's a Chapter 7, also known as a complete liquidation. A Chapter 13, the nice way to say it is it's a restructuring of your debt. So you go onto a payment plan. So in a Chapter 13, you file, they come up with a payment plan, and then at the end of the day, that plan is 3 years or 5 years long. Your paychecks get debited from your job for 3 to 5 years. The debt gets paid back. Doesn't get paid back in full. Not necessarily everything gets paid back, but ultimately your debt gets paid back. That's a Chapter 13. So 13s are repayments or restructuring of your debt, and it's paid over a period of time. So you have 7s and you have 13s. Now, the different types of mortgages out there, and the predominant ones are VA, USDA, FHA, and conventional loans. Those are the big ones I talk about. I always say that I guess you could call a fifth one as a portfolio product where the investor, the lender's not selling the loan, they're holding the paper, whatever. That's a different animal. You're gonna have a real hard time getting a portfolio loan with a bankruptcy on your credit. But let's go with the standard ones, okay? On a Chapter 7 bankruptcy for VA, really for VA, FHA, USDA. So from the time you file the bankruptcy on a Chapter 7 until the time it's discharged, generally speaking, it takes about 4 to 6 months, okay? So it takes about 4 to 6 months to get to the discharge. From the discharge, you have what's called a waiting period. So there's a specific amount of time that you have to wait from the discharge date in order to get qualified. Now, there's exceptions to what I'm telling you right now. I hate even saying that because then people say, well, if there's an exception, I get the exception. You better have you were divorced and this had to occur. It's not even, I went bankrupt because I got divorced. That's a reasonable reason that happens to a lot of people. That does not excuse you of the waiting period on FHAs and VAs and USDAs. So be real careful with exceptions. But the waiting period, for example, for FHA is 2 years, for USDA is 3 years, for VA is 2 years, for conventional is 4 years. So that's the waiting period from the time of the discharge. So if you're watching me right now and you had a Chapter 7 bankruptcy, my question is when was it discharged? And whenever it was discharged, you then have to meet the waiting period before the door opens that you can come back for a loan. Now, just because you meet the waiting period time doesn't mean that you get the loan. I have videos over credit scoring. People get so fixated on credit scores that they'll say, well, I have a 692 score, that means I get a loan. Well, not really. You have a 692 score, but you have a Chapter 7 bankruptcy discharged a week ago, okay? That's going to eliminate you all day long. So at the end of the day, you've got to pay attention to those waiting periods. On the Chapter 13 bankruptcy, we go off of the filing date for FHAs, VAs, and USDAs. We go off of the discharge date for conventionals. So for a Chapter 13, you can actually go VA, USDA, or FHA while you are actually in the Chapter 13. You just have to be 1 year from the filing date of the bankruptcy. On a conventional loan, you have to be 2 years from the discharge of the Chapter 13. Again, on FHAs, VAs, USDAs, not only can you get it 1 day after your discharge, we can give you that loan while you are actually in the Chapter 13 bankruptcy itself. So how does bankruptcy affect qualifying for a mortgage? You have waiting periods, you have the filing dates, the discharge dates. Those are the big questions. The two bankruptcies we pay most attention to are Chapter 7s and Chapter 13s. If you have a mortgage in the bankruptcy, this is a problem that we run into a lot with Chapter 7s a lot of times for the most part, is that when you file bankruptcy, everything's in. I'll have people say, Hesh, I don't want to put my house in my bankruptcy. I got news for you. You don't have a choice, okay? Everything's in. The clothes, the jewelry, the house, everything. Everything's in the bankruptcy. You could take stuff out of the bankruptcy. That's called reaffirming it. But a big thing that happens is people have a mortgage, they go bankrupt, their bankruptcy attorney says, hey, don't worry about the mortgage, it's taken care of. In their minds, they don't have to pay it anymore. They stop paying on the mortgage. Then they come to someone like me for a loan. We're going FHA or VA or USD. Really, we're going FHA on this one here, just as an example. And the house hasn't been paid and the mortgage still is outstanding. It's little details like that that screw up this little formula. It's not as simple as just getting out of the bankruptcy date. There's other things, or out of the discharge date, the waiting period. There's other things we look at, but that's the big one to pay attention to. Pay attention to Chapter 7, Chapter 13, pay attention to your discharge date. You could absolutely qualify for a mortgage loan with bankruptcies. You have to be working with the right people. So naturally, catch me on my next video. I've got well over 500-600 of these videos that give helpful information like this. Subscribe to my YouTube page because I can use all the subscribers I can get. And then of course, like, comment, share this on your page, and I'll catch you at the next one.